All right, so I'm going to record a quick video to give you guys an example of one of the strategies that I use when day trading. I'm going to go ahead and use today's price action on two tickers, DraftKings and Tesla, to show you two different kinds of um, examples. So I have a couple of rules that I generally work with on here. I will try to kind of explain them while I show it to you so it's a little bit less wordy. So you can see this is DraftKings. Today is August 12th of 2021. What I'm looking at on my charts are I have simple moving averages and EMAs. So the SMAs are these non-shaded moving averages. So green is the 50, red is the 100, and purple is the 200. And then I have the EMAs, which are basically based off of the Ripster's cloud study. This is the TOS version of that. This is the 8, this is the 21. Okay, so moving on. What you're looking for is a stock that around the open, this generally works the best on bigger volume. So I'm looking for the moving averages to be as tightly grouped as possible. It just gives you the most amount of support or resistance if you're playing puts for this to play out the way that you can see on the screen played out. So rule number one, I generally won't be able to use this in the first 5 to 10, even 15 minutes of market open. It generally doesn't help predict those big moves at open or close. Um, so as you can see, the bigger the candle, the more likely it is for that breakout to fail on this setup. So one of my biggest rules is if it breaks through all of these moving averages on a really large candle without any consolidation around the moving averages first, then I'm not interested. I'm going to wait until it retests those levels and gives me a little bit of consolidation around all of those moving averages. So this was a perfect example because you can see it opened up just a little bit above the 50 moving average, basically right on top of it. It shot up, not interested. Shot back down. You'd say, okay, well, why didn't you buy puts? Well, this is a really big candle. Broke through all of them and it closed under them, but it was a big candle. So I'm looking for consolidation under or around those before I make my decision. Um, so it basically was consolidating and it was up and down, right, basically between the 100 and the 200, but with no clear direction, a lot up, a lot down on every single candle. So that's not what I'm looking for. But if we get a reversal through all of those moving averages after that kind of consolidation, that's what we're looking for. So if that candle's a little bigger, that's okay. But generally, that first candle break, that first candle close over all of the moving averages, we want it to be on the smaller side. It just generally is more repeatable when that's the case. So the way that I would enter this is I'm going to wait for this candle that breaks all of these moving averages. EMAs, I don't look at yet at this point. The first candle close over all of the simple moving averages, which would be this candle here. I wait to enter until the following candle breaks the upper wick of that candle here. So I would have entered the trade right here, right around 52.40. I would have ridden it up to here around 53. And depending on what day it was and what percentage of profits that are, because if it's Thursday or Friday, that's probably a pretty good move already. I may have trimmed, but my trims and your trims, risk tolerance, totally different for you than they are for me. So as generally speaking, I'll stay in these types of trades as long as the stock stays above the 21 on the 5 minute and doesn't close below it. it can dip below it, like you can see this candle dip below it, but it still closed above it. It kept retesting it, but it never actually closed below that 21. The other way you could play this particular play is if it starts to if you made some money, let's say you trim right around 53, and it starts to get back to where you are near break even, you can go ahead and sell then. And then when you get another breakout, you can buy back in. As long as it's still above all these SMAs, that's still totally fine. So moving on, never broke below the 21, so I would have stayed in this trade. And you can see it just kind of keeps moving up. It keeps dipping into that cloud just a little bit under the 8, but never actually breaks or gets close even to the 21 until all the way up here around 54.36. 54.35, somewhere around that range. So at this point, I may take my profits and or sell when I start to see this flat price action across this level here. But once we get this candle close right here, if I was still in it, I would have gotten out. That's just me and how I play this from a day trading perspective. You can oftentimes get a 2 or 3 day move when you get this kind of successful breaking of all 3 of these moving averages. So let's go ahead and give you a slightly different example with Tesla. Again, also today, but you can see really tight moving averages on top of each other. We opened up below and never broke through, never really even tested them, never even touched them. Got close, but never touched them until right around here. So we start to see that consolidation that I'm talking about here. So you could have played this a couple different ways, because technically this this candle right here closed above the 200, which is the top layer moving average in this ticker. So I could have taken the trade right here at a little over 708 when it breaks that upper wick, and then as long as it doesn't break that 21, I'll stay in. In this particular case, I wasn't watching the ticker until it was around these 2 candles here, and I didn't enter until this big candle here. I want to say I entered somewhere right around 709 when I noticed that we had gotten that nice consolidation on top of all of our moving averages, and that my proper entry based on this stat would have been somewhere right around here. And you can see, like I always give these trades like 20 to 30 minutes to work before I cut bait, unless they absolutely tank or go the opposite direction. Because a lot of times when you're breaking through that many moving averages, you get a lot of consolidation around that before the actual break. And you can wait for the actual break, but a lot of times it'll be too fast. You'll miss it. It'll be hard to get a good fill. You play it however you'd like. But anyway, then we get that actual breakout. And like I said, I bought in here when it got above the 8 EMA. And you basically ride it up. Now, in this particular instance, I sold when we got somewhere in this area here, around 720, 721, because my price target in this particular instance was 720. And it turned out, because it's Tesla and premiums move really fast, it turned out to be a great trade. And it was all of 20 or 30 minutes that I was in that trade. But if you wanted to stay in it longer in hopes for a little bit more money, you could have followed it, but you would have ended up getting knocked out probably right around here when you get that candle close under. But each person has their own risk tolerance. Each person has their own greed factor of how much they want to make on a trade. just remember, gains are not gains until they're realized. So always remember to take your profits, trim along the way. If you only have one contract on more expensive contracts like a Tesla or an Amazon or one of the bigger tickers, and you're only taking one, when you get to 20, 30% profit, whatever it is, just set a stop or a trailing stop. And if the stock keeps moving up, just keep moving up your stop. Every time it moves up 5 or 10%, move your stop up 5 or 10%. And that way you can guarantee that you'll never lose money on the trade. That's it. That's my strategy for one of my strategies for day trading using EMAs and SMAs. Let me know your thoughts.